Hey traders, hopefully you had a great weekend. We're going to be starting off with the NASDAQ as well as the S&P here today. First off, we want to look at the NASDAQ. Looking at this symmetrical triangle, we see a series of lower highs and higher lows. Squeeze the price closer together. You can also draw horizontal zones kind of similar as well, but the ascending zone, which is a support zone, is more prominent than the descending zone. But overall, we do see a squeeze, a contraction in the volatility, and we are looking for a break potentially to the upside. And the reason is we've already seen a asset that has a similar positive correlation risk on, a asset that you invest in a risk on environment or risk on sentiment would be the S&P, right? The Nasdaq and S&P have that positive correlation where if it's a risk on environment, if investors are feeling hopeful, optimistic, they're going to be investing in those types of assets. Unlike the US dollar, for example, you would only be looking to exchange assets for US dollars when there is a market crash like we saw in March of this year. So we can see overall looking pretty well respected, but if we move out and get back into the NASDAQ, into the S&P from the NASDAQ, we see somewhat of a similar structure. The descending zone is more prominent on the S&P. We can see that right here. Nice strong push to the upside, breaking this descending zone if we zoom right in. And then we're getting a pullback validating the previous resistance. Very well respected, nice little market structure retest right there. And then we saw an impulsive push break the price above the zone on the daily. We see a candle closure on this previous candle on the 9th of November. We did not see a candle closure, so that did not validate the breakout. And then we see a breakout above the zone, a green candle, bullish candle breaking above the around, let's say, 3,590-ish zone, and then we're getting that pullback, and that was the previous all-time high. So overall, these charts do look somewhat similar, and I think the S&P is front running the NASDAQ. So I think if we're going to have this continuation of the risk on environment, the NASDAQ will continue and have a similar type of reaction to the SPX, which is going to be in reaction to the upside. It's going to have an impulsive push where buyers are going to be picking up the shares, picking up the asset, and moving the price higher, taking out all the asks. So that's going to be my speculation for this upcoming week, and I think that that's going to play into the cryptocurrency market moving to the upside. We're going to be looking a little bit more into the alts as well. First off, we always want to be looking at Bitcoin because that's going to be the most dominant, the largest cap by far in the cryptocurrency market. So let's first look at Bitcoin and have a good understanding of what happened here. So we were squeezing really strongly. Let's get the picture right here. We saw a nice descending zone and an ascending zone from this previous resistance turned into support. You could also draw it like that. So this was a nice symmetrical triangle with a series of higher lows and lower highs, and then you saw an impulsive push, and then you saw the pullback validating the previous resistance right here as a new level of support. We made a TikTok about this. We talked about it on the Discord. So definitely we tried to make people aware of the situation on a technical standpoint. I feel like we've been pretty freaking good with the calls so far. But anyways, let's proceed with the video. We saw a pullback. We were explaining how this is a contraction. As long as it's holding above, let's say 15.8, 15.9, around right here, this level of support, and we squeeze, and then once we start to see the impulsive push, we're looking for buys, we're looking for entries for continuational push, right? And then we saw a nice pullback validating the previous resistance right here, and that is the possible entry that you could have taken. So that's exactly really picture perfect in terms of price action, and we're just going to be looking for a possible continuational pullback right here, and then we're going to be looking for another push to the upside. So overall, we're only looking for longs. We're not looking for shorts. Why in the world would we be looking for shorts in such a bullish market? We're only looking for long opportunities. So this is a 2-hour chart of Bitcoin. It's not extremely a large perspective, but we've seen it so many times. If you don't, just go on TradingView, go on the weekly chart, and see how that symmetrical triangle broke out. After we broke out 10K, we're really on a bullish push up. So we're looking at this and we're thinking around 17.5 is going to be the next level of resistance. So that next push is going to be around there, and then we're going to be looking to take some profits off the table. But in this current market, I think it makes a lot of sense to use a trailing stop loss or manually move your stop by moving it slowly, incrementally, below a main level of support. So let's say you entered here. Once it establishes a key level of support at this previous high at 16.4, 16.5, and then it starts consolidating and you get that first major break, that impulsive push, then you can manually move that stop loss up above that previous support. So you get a little bit of cushion. You don't have that much of a loss, or you can completely eliminate the risk off the table, only leaving you profit, and that's the ideal situation to be in. And then you let the profits run, and hopefully they'll continue, and then at a certain point it will hit your stop loss, but the goal is to let it run for as long as possible, especially in these situations, because you have no idea how far it can go, especially if you're looking at some of these alts that we're going to be taking a look at within this video. So that's going to be BTC. Quick look at the volume. We do see that overall there is tremendous amount of buy volume on the pullback that we're seeing right now. Almost no sell volume, not a lot of sellers coming into the market, dumping BTC into the market. Lots of buyers trying to pick up this asset on the way up. Definitely a really good situation if you're a buyer. You don't want to be shorting in this market. Now let's look at the Bitcoin dominance. So we were looking at this as a potential squeeze. We saw a descending channel. If we saw something like this, where we saw a failure and then something like that, that would be a descending triangle formation where you get a horizontal level of support, descending level of resistance. We still could have that. At the end of the day, we have not passed this high right here, so that's going to be the market structure high that we want to pass. But we also do see a descending zone where we see a high, a lower high, a lower high, and this could be that lower high, creating that descending zone, and then this is going to be that previous level of support that we have to keep an eye on. So we're not out of the contraction yet, because this could be a possibility, but if it starts to move to the upside, that means that it could break market structure, and then we could have something like this where that looks very similar to a reverse head and shoulders, right? And then the next target would be this zone right here, or at least minimum this high right here. So overall, that's going to be the BTC dominance. Obviously, we're not trading it, we're just using it to understand where the capital is flowing within the cryptocurrency market in more speculative assets like altcoins, or is it going to be stored and most of the capital is going to be flowing into BTC? And this is when there is less speculation, less greed, less optimism, less hope in the market, because you need those emotions to speculate in alts that have much less of a chance of retaining their value over time, in my opinion. BTC's definitely stood the test of time in terms of cryptos. So that's going to be the market cap. We're going to see how it goes. We're not trading it, but we're just using it as a tool. Cryptocurrency market cap excluding BTC. This is the altcoin market cap. So we're going to see if we're able to break above this zone right here. Haven't really broken above it yet. We're slowly, incrementally creeping up, but I don't love it, because if you draw a nice little zone like this, yes, you could say that's an ascending triangle formation. If it starts to break above, that's phenomenal. That's going to be really, really bullish, and that's going to be the next potential target right over there. But it could either go two ways, right? If we start to get a double top, where this is the first top and this is the second top, that was bad too. This is the second top, and you get a push to the downside, and then you're getting this little wedge here. That's not great. And then you can get another sell-off, and then you see this larger formation that could come in. So obviously, we've broken a major level. I don't expect that to happen. I think we're going to be looking at consolidating around this zone, because if we zoom out, we can see that's a very nice bottom, and then this is the major level that we broke out of. Once we broke out of the 115, 116 billion market cap, that was a key zone for the market cap to break out of. We saw an impulsive push. This is a pullback, validating the previous resistance as a new level of support, and we're still assuming that the altcoin market will rise. We're just looking at the BTC dominance, the cryptocurrency market, excluding Bitcoin as well as Bitcoin, and just some of the major alts that we're going to be looking at to have a good understanding where the money is flowing. Because as of right now, some of the coins, like for example XRP, did really well, really shot up, recently broke out of its major symmetrical triangle, which we'll take a look at next. So just wanted to take a look at the total too. So that's going to be all the charts. We're not really going to look at BTC volatility today. Let's just leave that here. And then we're going to be looking at XRP. All right. So that's going to be right here. Let's go to the daily chart. And the first thing I want to understand is how close are we to the 30-cent zone? Because the 30-cent zone on XRP is a major level of significance. We see that it was held, let's get our brush, held very well all throughout 2019, and then fall of 2019, we broke that zone, resistance, 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 and resistance. We haven't broken above it since. So this 30-cent zone is a major level of sell pressure. On the flip side, if we break it, every single person who's bought above or past August 19th is now positive, unless you're like getting the top of these wicks right here. But overall, if you bought anywhere in here, you're now in the green, which means that there is more optimism, hope in the air, because every single person who bought here is now bullish and is green, is positive on their overall investment. So that's going to be a really important zone to look at, is around that 30-cent area, just to keep in mind. So when we do look in the smaller time frame right here, we will see this descending zone that is very well respected, as well as this previous resistance, which is acting as a new level of support, creating our descending triangle formation, as you can see within the squeeze right there. So that's this is the weekly chart. We're now going to go on to the 12-hour chart. So let's take a step back here. And overall, it does look pretty well respected, am I right? So recently, it broke out of this 26 range. I don't really want to be looking for any opportunities just because that 30-cent range is so aggressive, unless you're really able to get that nice entry kind of close to that zone, maybe a nice stop loss right there. First target is like a little bit of an over exhaustive move above the 30-cent range, maybe 31, 32. So that could be a pretty solid risk reward. But I think at this point with, let's get, it's not really working. Let's just get like this. Sorry for the delay here. So if you are looking for possible entries, I'd say for XRP, breaking above the 30-cent range would be a good opportunity. But in terms of bullishness, it does look pretty bullish. We're seeing a lot of buy volume coming in with a surge in the price here, coming up to the main level of supply with a, on a large time frame, a series of higher lows, lower highs, squeezing, and you're getting that nice impulsive push to break above, starting your next really new trend, hopefully breaking above the 30-cent range. That would really be nice, because I think that would make sense, because then BTC got its first kind of pre-bull run anticipation where BTC was running and a lot of other alts weren't. We kind of saw that in 2019 in the summer. Excuse me. And what we're going to be looking at now is potentially NEO. I'm going to be pausing it for one moment here. Or I just have to get some water. So the next chart we're going to be looking at is NEO, and then we're going to move on to Ethereum. NEO does look like it's pretty good. I do want to wait until this zone is broken right around here, around $19, because then we see a nice descending wedge. When we look on the weekly chart, pretty well respected. Not ideal. You see this zone right here. Actually, I think this looks absolutely phenomenal, because we are looking at a horizontal zone. But what if we draw a descending zone from this high to this high to this high? And what do we see? Something just like that. That looks, I would say, beautiful. That's a really phenomenal potential opportunity. So overall, NEO does look pretty bullish in terms of the weekly chart. We will look at it from a smaller perspective. I really like the fact that we see much more buy volume than sell volume. We see that the impulse pushes to the upside are getting much more transactional volume compared to the pullbacks. We love seeing that. We saw a nice impulsive push up, contraction and volatility, a descending wedge, which is one of our favorite patterns to trade after breaking a major zone of consolidation, which would be right here. So a rectangular zone. That would be the previous high that we want to break. We broke it, now we're retesting it. Looking at the daily chart, we see a nice, well-respected descending wedge formation. This is our anchor point, first touch point, second touch point, and then we see a little bit of hesitancy. And let's just switch over to the 6-hour chart. Yeah, I definitely would like to see that first pop, that first real impulsive push. Let's just draw a projection in there as well. So we're going to put that in like so. Just so we get a little bit of the wicks that are protruding above our descending trend line. So in short, I'd like to see the price go above around $18, $19, start the impulsive push, because we could see this just fizzle out. We have no idea, right? It's just a game of probabilities. I don't want to look at this consolidation breaking because there's a lot of room right here. Yes, I understand, but it could just fizzle, and then come back deep and then go lower. And then once it breaks this zone right here, that zone of confluence, that's a game over type of situation. I do not want to be involved. So what I'm looking for is a break of this major level right here, and this major level of support, and this major level of significance. So overall, we see that around 19 up to leading to $20 is a very significant zone in the previous historic time frames, and I want to see it start the impulsive push and break above it before we look for opportunities, because I don't need to be the absolute first one in. I want confirmation that the bulls are coming and the bulls are already arrived. If it's going to be bullish, it's already going to pass $19, right? Yes, you will sometimes lose entries if you're going to have a massive spike like that and then you start trading. Like, unless you have a stop entry here and you're going to get pretty bad slippage, or you're able to get an entry there, it's difficult to capture these sort of situations unless you maybe have an algorithm or a order in the market already. But in our type of method, we like to wait for confirmations. We like to wait for pullbacks, and that's just the way she goes sometimes. So that's what we're going to be waiting for on NEO. So that's going to be a good opportunity in our opinion. And then Ethereum is going to be the last one on the weekly. It looks very bullish. On the 2-hour, 4-hour, it looked a lot more bullish. It's looking a little bit less now. We saw an ascending zone that failed, but overall, when we look at the large time frame, look how bullish it looks. This previous around $300 zone, major level of resistance, now turning into strong level of support. We're getting a squeeze right up to the previous high around 480, well above this major level of support. So we've already broken the major significant zone on Ethereum to the upside, and I think that Ethereum is going to start flying pretty soon. We got a little bit of a tumble after breaking our ascending support zone. So if we zoom in, we saw this nice ascending trend line connect the higher lows like so, but we were anticipating a potential breakout above this zone. We did not get it. That's why we always wait for confirmation. And then we saw a little bit of a pullback, but we didn't really see much of a lower low. Saw a lower low to this low, but we could look at this zone potentially being a major level of significance as well. So I'm not really looking at shorts or anything. Obviously, I'm still looking for longs. Right now, what would be nice is if we saw something along the lines of that, maybe a lower high and then a series of lower lows, and then you get a nice impulsive push, a tight consolidation, and then your next impulsive push breaking this zone, nice pullback, and then you're going to get that continuation forward. So that's going to be the overall approach that we're going to take to Ethereum. I'm not really going to be looking for anything other than that. If something else happens, so be it. I miss a trade, that happens. And if something comes in the wheelhouse I'm comfortable with, I'm definitely going to take action and see if I can maybe possibly get an entry if the right price action and right structure come together, really, in short. So that's going to be the video for today. Hopefully you enjoyed it. If you have any questions, drop them in the comments section below. If you enjoyed this video, thought it was educational, informative, entertaining, it would be great if you would like the video and subscribe so we know that we should continue to make more videos like this. So thank you very much for watching. We appreciate it. Until next time, have a good one.